Line break charts were developed in Japan, and they were popularized by Steve Nisson in the book Beyond Candlesticks. And the purpose of line break charts is to filter out the market noise and give a clear indication of the current trend and trend reversals. So as you may know, sometimes determining the current trend can be pretty difficult due to the market price movement that consolidates, and a trend reversal can be just as difficult. Now, the 3 line break chart, as you're going to see and here, can make this process a whole lot easier. This here is a 3 line break chart of the daily Dow Industrials futures contract, the YM. And you can see it could almost be mistaken for a candlestick chart or a renko chart, but you'll see that the line break charts and the candlestick charts are pretty different. The white and the red bars, they're called lines. Now notice that whenever we have consecutive white lines, each line has a higher close than the previous one. When we have consecutive red lines, each line has a lower close than the previous line. Line break charts, they're defined by 2 values, the line break number and the underlying time interval. These values are used in the construction of the line break chart. The chart we just have here is a 3 line break chart of the daily YM. And in this case, the construction rules are as follows, assuming the last line on the chart was a white line. If the close of the daily bar is higher than the high of the previous white line, draw a new white line with the open equal to the previous line's high and the close equal to the close of the current daily bar. If the close of the daily bar is lower than the low of the last 3 lines, draw a new red line with the open equal to the previous line's low and the close equal to the close of the current daily bar. And lastly, if neither of the 2 conditions we just talked about are met, no new line is produced. So why do we call it a 3 line break chart? As you can see from the construction rules, white lines are only drawn if the daily bar closes above the previous line or if the daily bar closes below the lowest low of the last 3 lines. The rules for the red bars are the inverse of what they are for the white lines. This chart here shows the relationship between the 3 line break chart on top and the daily candlestick chart on the bottom. The numbers on the bars indicate how single bars or groups of bars on the daily chart relate to the white or red lines on the 3 line break chart. And it's important to note that the construction of the line break charts is based on closing prices in the underlying time frame. In our example, it's the daily chart. The daily highs and lows are not shown on the line break charts, just the closing prices. This needs to be kept in mind when you're backtesting a line break chart trading strategy, because we have no way of knowing how far price actually moved above or below the lines. So a trading system that's based on line break charts must have all entries and exits based on the close or the open of a line. As mentioned earlier, the 2 key values of a line break chart are the line break number and the underlying time interval. We can construct line break charts based on daily, weekly, 5-minute, hourly, or any time frame. They can even be based on an underlying tick count, for example, a 150 tick interval. And this allows us to adapt them for day trading or swing trading. The line break number itself can also be changed. Although the 3 line break is the most popular chart, it's also possible to build 2 line breaks, 4 line breaks, or whatever. The difference being that a reversing line needs to break the lowest low or the highest high of the previous 2 or 4 lines, respectively. And this allows us to tailor the strength of the reversal needed to declare a change in trend direction or change in line color. Now, the simplest application of line break charts is to use the change in line color as a trade setup. When the first white line forms, you go long. When the next red line forms, reverse to short. Repeat for each change in direction. Look back at the line break charts from earlier, and we can see that this can be quite an effective trading strategy in strong trending markets. However, during market consolidations, it can really lead to significant losses. Alternating line colors are a clear sign of consolidation in the market, and they can help mitigate that risk somewhat by telling us when to stay out of the market. And another approach that works really well with line break charts is to use them for identifying simple candlestick chart patterns. This graphic here, it shows how well the chart highlights a double top and double bottom formation that defined a short-term trading channel. A line closing below or above this channel gives us a clear setup for going long or short, and we can use the height of the channel in projecting the target for the move. We could also use simple trend lines to indicate reversals or to help us trail a stop in an existing trend. And it's also possible to use line break charts in conjunction with standard technical analysis indicators in the creation of a system. And here we have a simple system based on a 3 line break chart with an exponential moving average and the CCI oscillator. In this system, long trades are entered when the CCI crosses above minus 100 and a white line closes above the exponential moving average. The trade is exited when the CCI crosses below plus 100 or a red line is formed. The rules for shorts are the exact opposite. The green arrows show long or short entries and the red arrows show the exits. The entry or exit rules, of course, they can be refined through the use of different or additional indicators and lower time frame charts. And finally, line break charts can serve as a directional filter for setups on different time frame charts. Only go long if the last line was white, go short if it was red. Now, line break charts can be a very valuable addition to a trader's tool chest. They can be used on their own or in combination with other charts. Just be careful when back testing these charts. Remember that only the closing prices are plotted, not highs and not lows. So test results may look much better than real trading results would have been. Thank you for watching this video, and it'd be great if you could hit the like button below and take a moment to subscribe here to the right. You can also enjoy this other video that we've chosen especially for you.